Bitcoin can go to $1. Bitcoin can literally go to 1 penny. It's either something or it's nothing. It's either going to zero or it's going to a million. If it's not going to zero, it's going to a million. Bitcoin could go from $100,000 to $1,000.
Michael Saylor is about to tell you something most people are not ready to hear. Bitcoin is either going to crash to $1 or explode to $1 million. He's betting his entire company on it. In this video, he breaks down what's really happening in the market right now, why the world is changing faster than anyone expects, and why the next big move could catch millions of people completely off guard. Be sure to watch until the end to get the full picture.
There's a massive battle between the bulls and the bears. The skeptics to the haters, they think it's tulip bulbs, they think it's nothing, they don't understand it, therefore it must be worth zero. And the bulls say, you're going to see massive pools of capital surge into Bitcoin, the price is going to move up, and a lot of people will buy Bitcoin. If you wanted to buy Bitcoin at the all-time high and you want some of the upside, but you don't want the downside, you would do it with one of our bond type instruments. But can you see why, so $100 billion of money is in Bitcoin spot ETFs. They get 100% of the upside and 100% of the downside. Can you see why someone might like the idea of 100% of the upside and none of the downside? You can't create 100% of the upside and 10% of the downside without a pool of permanent capital that is a buffer or over collateral. So the ETFs don't have collateral. The ETFs don't have permanent capital. MicroStrategy, for example, can take our $40 billion of Bitcoin, and I can sell you the senior $4 billion tranche as a security, and I can say, you're going to be 10x over collateralized. So if Bitcoin trades down by a factor of 90%, you're still getting paid back. All of those investors are coming to the market right now, and Bitcoin serves some of them. The spot ETFs serve some of them. Companies like MicroStrategy serve others that are either very risk averse or they want leverage and performance. Bitcoin could go from $100,000 to $1,000. The debt's not getting called. There is no recourse. Bitcoin can go to $1. You see, Bitcoin can literally go to 1 penny. The debt doesn't have, there's no call feature. What would happen is if Bitcoin crashed by 75%, the stock would trade down. We would just pay off the debt with stock. So the risk isn't in the debt so much as it's in the equity. But the point, and the people are like, oh, well, that makes the equity more risky. Well, yeah, that's the point. The point is the people buying the equity want the equity to trade down harder than Bitcoin, and they want the equity to trade up harder than Bitcoin, because some of the people that buy the equity are the convertible arbitrageurs and the options traders. The options trade, like there's a lot of people that want to short the equity. Why do they want to short the equity? Because they're hoping that if Bitcoin trades down, they get a 1.5 boost or a 2 boost. So if you don't want volatility and leverage, don't buy the equity, right? Buy the bond. And if you want something in the middle, buy Bitcoin if you want to hold a commodity, or buy the ETF if you want to hold the security wrapper of the commodity. The other thing we do is we have permanent capital. So we have permanent Bitcoin capital, like 30 to $35 billion worth of it, depending on how you count it. And we can lever that, and we can lever it into the equity and into the bonds. And so that capital and that equity is the basis for the largest options market in the crypto ecosystem. So our options market is $90 to $100 billion sometimes. And our equity is the most volatile equity. Generally, I think we're the most volatile equity, of the S&P 500. We're more volatile than every one of them. So MicroStrategy is a basis for options traders. It's a basis to short Bitcoin, to go long Bitcoin with leverage. If you wanted to get 2x Bitcoin return via equity, when we lever up the balance sheet, we can give you more volatility and more performance than Bitcoin. And then if you wanted to buy Bitcoin at the all-time high and you want some of the upside, but you don't want the downside, you would do it with one of our bond type instruments. So really, we're a treasury company, and because we have permanent capital, I mean, the special thing is we have the largest capital base of any crypto company. We have $40 billion of permanent Bitcoin, and we also have an operating business. So we can choose to issue bonds, redeem the bonds, issue equity, buy the equity back. An ETF can't do that. And so we're offering a lot of the capabilities that people have had in offshore crypto exchanges, but those were not, most pools of capital in America couldn't go to Durabit, or they can't go to Binance. And so we're the institutional gateway for the crypto ecosystem, that if the volatility goes to zero, the options are worthless. So for example, if you calculate the call rate, if you hold $1 million of USD and for 30 days, you're getting an annualized interest rate of SOFR, about 4.8%. If you hold $1 million of the S&P index, you're getting like 15%. If you hold $1 million of IBIT, before the options market on IBIT, you couldn't get anything. With MicroStrategy, you could get 200%. So the volatility actually creates a really strong call rate. I mean, it attracts the hot money and the traders, and that's what creates the options market. And without the volatility, you can't sell a convertible bond. In order to sell a convertible bond, you need a volatility of more than 45. The S&P is 15. But if you're holding Bitcoin, which is 60 vol, or if you lever Bitcoin, and we lever the Bitcoin to get to 120 vol, we can rinse and repeat that trade. We can, in essence, issue $1 billion in convertible bonds, buy Bitcoin, wait a month, do it again, wait a month, do it again, wait a month, do it again. So we're the most prolific issuer of convertible bonds in the world, because we're the ones that have the best use of proceeds. What do you want? You want the thing you invest in to go up faster than the S&P index, and you want it to stay volatile, more volatile than the S&P index.
The Bitcoin market is showing a choppy but generally range-bound performance around the $92,000 level, as traders await a key Federal Reserve rate decision. Volatility is elevated, suggesting a potential breakout is near. The market has been supported by a recent recovery, though it remains cautious. MicroStrategy stock has been tracking this Bitcoin volatility closely. The company, the largest corporate Bitcoin holder, recently purchased an additional 10,624 BTC for over $962 million, reinforcing its leveraged crypto strategy. MSTR shares rebounded following this news and the general crypto recovery, trading as a high beta proxy for the digital asset. Also, if you have kids or a young family, make sure to teach them about Bitcoin as early as possible, before it's too late. This Bitcoin Teen ebook is the perfect guide to get started, providing simple explanations and practical tips to help young minds understand and navigate the world of cryptocurrency. Link is in the description.